Well, hello everyone, this is Noah McIntosh of McIntosh and Associates, and here for your market update. Well, after President Trump announced Iran had agreed to hold ceasefire talks last Tuesday, mere hours before his deadline where he threatened to attack and destroy Iran's power plants and bridges, markets took off. The Dow was up 1,325 points on Wednesday, its best day since April of last year, while oil retreated. The ceasefire trade led to the market going on another mini run on Thursday before cooling a bit to end the week. Now the hard work of stabilization begins. The talks scheduled for the weekend of April 10th and 11th were hosted by Pakistan and ended without an agreement. Is the regime just stalling for time? What exactly stalling would achieve isn't apparent and would only lead to the resumption of the bombing and destruction of Iran's infrastructure, more suffering for its people, and even harsher demands from the U.S. Markets will continue to swing dramatically with every twist and turn in this saga. On Friday, there were reports that traffic was piling up in the Strait of Hormuz after Iran agreed to the free flow of shipping. Then the U.S. announced it will blockade the strait after talks fell apart over the weekend. Time will tell how all this will end, but markets will continue to react each new move in dramatic fashion. All this is fluid, so be mindful that we have gone this far with all this volatility, and the Dow and S&P 500 are still close to their all-time highs. It may sound crazy, but we may be talking about new records in a matter of weeks. Again, this is where patience pays off. Taking the long view, having a plan, and maintaining focus typically benefits our investors. As individuals, we don't have the gizmos or the time to compete with Wall Street traders on the same playing field, but we do have the ability to wait out these wild markets and stay on course. This crisis is far from over and will probably feature more twists and turns along the way, but so far those who have stayed the course seem to be doing okay. Key news on inflation rising thanks to Iran conflict. It was no surprise March's consumer price index reading came in hotter than it has been. The reading was entirely predictable, mostly due to the rapid increase of oil and energy prices. Consensus was calling for a 3.4% year-over-year inflation, while the actual number was slightly better than 3.3%. And to add to that final reading of the fourth quarter gross domestic product being revised from an anemic 0.7% downward to a barely positive 0.5%. All this led to a not great day for the markets, which had time to ruminate and wait on the ceasefire meeting over the weekend. This euphoria dissipated as markets focused on the implications of higher inflation and a slow growth economy. Mundane economic data returned to the markets, focused back into economic growth and inflation and interest rates. The minutes from the Federal Reserve's most recent meeting were a non-event as the market soared with the announcement of the ceasefire last Wednesday. Maybe traders reread the minutes on Friday as the Fed showed growing openness to raising rates at its last meeting. With the uncertainty of how ceasefire negotiations would go and the shipping constraints in the Strait of Hormuz, markets decided to take gains and sit out the weekend to see what news comes next. The inflation number is wholly reversible if we see oil continue to decline. The problem is how soon will we see that reflected in consumer prices, which move quickly upward but have a notorious reputation for taking their sweet time coming down. For the first time in a while, markets took notice of economic reports instead of oil and the Iran conflict to close out the week. Well, coming this week, all eyes will continue to be on the Iran conflict, whether or not ceasefire will hold, and the outcome of the talks in Pakistan. Monday will be the light with only existing home sales. The other bit of meaningful economic news will be the producer price index on Tuesday. Like CPI last week, PPI will likely be elevated due to the spike in oil prices since March. On Wednesday, we'll get the Beige Book, Empire State Manufacturing Survey, and MBA mortgage applications. Thursday will feature the Philadelphia Fed Manufacturing Survey, jobless claims, home builder confidence, and import prices. Friday will be tamed with only housing starts and building permits. Fed speakers will be out in force. What we are looking for is any mention of raising rates due to the recent inflation spike. If transitory has any relevance when it comes to talks of inflation, it should be here. We'll see what the Fed speakers say. Well, that's all for now for your market update. We'll be back soon in your mailbox for some more updates. Again, this is Noah McIntosh from McIntosh Associates. Any questions, please give us a call at 989-692-2200 or check out some of our resources on focuswealthplan.com.